Here, 18th of October. Welcome to the weekly dividend video. We're just starting off looking at the 1 year government bond yields. So we saw back in 21 they broke out up to 4.6. Just go to a weekly chart. So we saw that about a month ago that was this big uptick, and now we've had a red candle. So interesting times. So a few unemployment issues, going to have to lower rates. So I think the RBA is at 3.6 now. So this is 3.4 over 1 year. So is this just a retest or a maybe that's a false break from a technical charting perspective, and it's going to fall down lower? We'll wait and see. The 10-year, interestingly, the 10-year yields this week went up. So long term, that looks more sustainable at higher, longer term rates than short term. If we look at the ratio, the 10-year over the 1 year yields, so that looks more continuous of I guess higher inflation expectations wanting higher yields. Okay, so on to the shares just in alphabetical order. So and I get all my dividend rates from Morningstar, because I know there's all different things where it plays, so just so you know. So Atlas Arteria, Global Toll Road Infrastructure, 8%. I mean, yeah, that looks like a pretty good buy to me. ACF, so they're in the actually this I must credit people for when they give me. So from Rob, he's put this forward. So they're in the hire and sale of equipment, scaffolding, formwork, 5.2 div. That's what we call the bullish chart formation there. So that looks good, pretty solid. AGL, so 4.9. They look like they want to come for a bit of a pullback. And I'm not too sure about this space really, about going green. Someone's going to have to pay for it. The government, AGL, or the people. But I think AGL's pretty intent on keeping their dividend. But it's all a bit of a bit messy, if you ask me. ANZ, so they're the highest of the big four banks at 5%. At all-time highs. Technically, from a short-term chart, that's not what you're buying dividend stocks for, but anyway, it's technically made its measured move. Interestingly, it's made it at the high, but it's the highest bank. APA, so the pipeline business, there's a great buy down there. So they're at 6.4, so that's pretty solid. Horizon's in the tank MVR ETF, if you follow the channel. So they're rail freight operators, 4.9. That was a nice buy back. That still looks good. Got to truck all those commodities around. Bendigo, so they're at actually I didn't know, that was 5.0, so they're probably a little bit more. So they look like they maybe want to come back and say hello down here, so no rush. BFG, Bell Financial Group. Okay, so they're 5.6. So in that financial space, they've got a partnership with Premium, which is a like a platform reporting business. Anyway, it looks pretty good. Okay, so now we go on to the king we're getting towards. So natural gas doesn't pay a dividend, but we'll get to why we're looking at it. So it doesn't look too bad, natural gas. It's got a wedge. It's broken this one, doing a double bottomy action. So natural gas doesn't look too bad as opposed to oil. So oil is sitting, so we're back to the COVID. COVID. Yeah, that was a while ago already. So these the tantrum we had back here, which is interesting. So if we just go over in really multi-short term, so this is a key level down here. So we're pretty much at the key level. So it's I'm not as bullish on oil as I am on metals, but there's a certain price that like, can it go further? I reckon it could have a spike down. So why we're looking at that, because so we've got things like Beach. So they're on 8%, 8.0. So they're pretty much near a bottom. They haven't been hurt as much as Woodside. We'll get to him. He's W though. BWP. So they're real estate from Cynical, real estate trust, warehousing, bulky goods. So pretty solid. Data. I reckon he's still a good. So they're like a IT wholesaler in Australia. So all this AI stuff, there was a screaming buy back here. I reckon it's still 4.5 now, so he's not over the 5. I'm trying to look for over 5s. DBI. So they got the the coal terminal. So this is from Jimmy Carter. They're on 5.3. It's in the uptrend still. DRR. So they're 5.5. They're in the king, the tank MVR. So they just take a royalty from BHP's iron ore. Elders. So they're 4.9. So they're like your the shop for farmers. So that looks pretty stable, pretty good. FMG 5.5. Very nice chart pattern. They're also in MVR as well. Fleetwood. So they're 8.2. So they interesting. The manufacture accommodation facilities for modular housing in villages. So although you can't build enough houses, maybe they're going to sit in all these manufactured accommodations. We need to do something. But 8.2, pretty solid. GQG, so they're a global fund manager, 10%. So there's a few of these at 10. So no, not a buy yet. I want to see some bottoming action. It's hard for these guys. They've got to compete with ETFs now, and so unless they're shooting the lights out with performance, but we'll keep watching them. HDN, so 6.2. So it's a REIT. In case you don't know, REITs don't pay franking credits because they don't pay tax. So they bunch of convenience-based retail properties in metropolitan centres. So looking good. Horizon. So this is 14%. You'd think back up the truck, wouldn't you? So they're a mid-tier producer with Asian and Pacific focus. Got a few oil fields. 14%. pretty good chart too. You'd have to have a serious think about that one. IGL, so IVE Group. So this is from Billy. He's in for growth and divvy. So they're paying 6.7. Another interesting business, integrated marketing and visual communication solutions provider. So anyway, that looks pretty solid. Chicken Man, so ING 7.5. Not yet. He's trying to, technically from a chart perspective, he's getting bought up here. But I reckon if you can see him, rather than try and optimise your div, I'd wait for a bit of green before buying. IPH, so Intellectual Property Services, 9.1. They're right back here at the old 2018 lows. It's sort of the same story, not just yet. Wait for some green. Perpetual. So this one by the Big Cheese. So Perpetual, so they're in that financial services space. 5.7. It looks okay. JMS 6%. So they're sort of really a royalty type company. They own half of a South African manganese mine. So they just collect the profits. 6%. Lindsay Australia, so trucking, transport, logistics, supply chain, 7.8. So they look like they're at the bottom of the range. Again, you can maybe wait for some more green before buying. Okay, MMS, Macmillan Shakespeare, 8.8, salary packaging. I was talking about these government and all those government employees, Elbow's got on the books, all packaging up their salaries, getting a car, electric car. I heard Canberra's only going to have electric cars at some stage in the very near future, which is interesting. And just as a side note on that, if every house had an electric car, that's where's all the electricity generation going to come from, and how much? Elbow. That was my little rant for the day. MYS, so Tasmanian Financial Services Company, 5.1. So looks okay. Coal price doesn't pay dividend, but technically it's broken the wedge, broke and done a double bottom retest. So that looks like a bottom's in. So New Hope Corporation, 8.2%. So following the coal price really. Long term, very bullish chart pattern. RFF, so 6%. So they own a whole lot of agricultural land, paying 6%. So it looks like they're finding a bottom. Resimac, so 6%. So residential mortgage and asset finance lending. So yeah, 6%, looking alright. Rio looks wonderful really. 4.6 in the MVR, in the tank ETF. Spark, so this is the Telstra of New Zealand. So look, they're putting in a bottoming action. Break from the declining channel here, up, doing a bit of a retest of the bottom. So I mean that's a 10.5 div. Again, wait for a bit of green for confirmation unless you love it. Okay, so here we go, Santos. So Santos at 5.5 at the moment. Looks like he's got his eyes on this one here. These are weekly candles, remember. So he's getting down to pretty attractive prices. Although you'd have to go for the king, Woodside, on 7.2. So he's paying a high div. Bearish candle last week. You'd have to back up the truck if he comes down to $21, really. That would put him in the high sevens for a dividend. Anyway, that's the only good news really in that story. Treasury Wine Estates, 6.3. Now this is interesting. They've got smacked this week. They're down to what's that, 2014. So that I think I read somewhere the directors are buying it at the moment. So I don't know. That looks like it's. Anyway. Wait for this week. If it's up, make your own decision. Tower. So they're in the general insurance business, 8%. So really getting back to the good old days. Then we got Waypoint, so another one from Cynical, 5.9. It's a REIT, service stations. Okay, then we got some ETFs. Okay, so VHY, it's a popular one. BHP, Commonwealth Bank, Westpac, NAB, Telstra, ANZ, Woodside. So probably pays in the, because you just got to look at the companies. So, but I mean, like Commonwealth Bank is in the threes really. So I'd be, I don't know about ETFs for dividends because you're all mixed up with everybody, and they distribute capital gains because they got to rebalance their holdings. So they've got to sell stuff, and then you get capital gains sent through your distribution statement. I think if you're a real dividend investor, you'd stay away from ETFs. But I'd be very interested if someone is holding one of these ETFs for income, and let us know your thoughts. SYI, it's another popular dividend one. Again, Westpac, NAB, ANZ, Macquarie, Telstra. Woodside's the only one that pays one over, or Woodside and Fortescue are the only ones that pay over 5%. All these other guys are under. So, yeah, go figure. Then we've got WiMAX. Okay, so these guys use a covered call. So 7.5% div, so it's a good div, but you're missing out on capital growth because essentially they sort of sell the growth by selling call options. So they collect a premium, but they give up the share price growth. It's as simple as I could put it. All right, that's your weekly dividend report. Have a good one.